Hey, it's Kina Knisley, and this is Coffee with Kina.
Morning sun is shining. It's a brand new day.
And today I have David Rose from First and Second Mortgage, and he is going to share about the 203K rehab loan that he can do if you need to do some rehab on a property. So thank you so much for hanging out with
Thanks,
us,
Kina.
David. I know nothing about the 203K loan, so he's going to do all the talking today. So tell us about, first of all, what do you do? You've been doing this for a very long time.
Very long time. I've been with First Second Mortgage since 2001, so that's January will be 25 years with the
Yeah,
same
he was
company.
like 12. So,
Right on high school.
25 years with the
25
same
years with the
lending
same company, yeah.
Well, they must be a good company.
They're a
if you're
good
gonna stay
company,
that
family
long.
owned, private, direct lender. So
And
we
they're
service
here
our
on
own
the
loans,
island.
and they're here on the island for over 30 years.
Yeah. So servicing their own loans mean they don't sell them off.
We don't sell, with the particular loan we're going to talk about today, we do, the 203K, but conventional Fannie Mae and Freddie Mac products, we service our own loans. So
Wow.
you become our borrower for life.
Yeah. So I don't know if you've ever bought a house and you get a loan, and then 2 years later you get a letter in the mail saying your new lender is. That's what selling off a loan is, right?
So
Because sometimes they'll do it a lot.
They'll do
You
it
get
immediately after closing. They'll
Yeah.
do it a few years down the road.
Yeah.
I can't promise we'll keep it forever, but Hawaiʻi loans especially, we plan to keep in service. That's
Oh, yeah.
the reason for our office here.
So that's great. You want somebody here.
Right.
And
You call me with a question. You don't have to call the 800 number.
Yeah.
Call me directly.
Yeah. And you want a lender here on island because we're weird. I mean, Hawaii is
Right.
weird. And
Property's unique. We have in-house underwriters and processors, so they understand.
oh, that's huge because underwriters are
And
the
I can go
devils.
directly to them with questions.
So yeah, they know underwriters just don't get it sometimes.
Right.
So it's great. I didn't
So-
realize your underwriters were here. That's even better. So yeah, because underwriting can be rough on us. But anyways,
Yes.
what is a 203K loan?
So a 203K loan is a renovation loan. It's generally used for anything from the maximum of tearing a house down to its foundation to just renovating kitchens and bathrooms. And I just closed one where he just wanted to upgrade the wiring, which cost him $15,000 to $20,000. So he wanted to bring it up to code. It was a 2-family house. He wanted to have the tenants control the heat and electric on their own versus him paying one bill. So he put that into his 203K, bought it, and borrowed the extra money to do that work.
Wow.
So you use a 203K to build your dream home on the location you found.
So what's the process? Here, I guess my concerns are there permits involved with a 203K
If
loan?
permits are necessary, we do require that the permits are pulled,
Okay,
That's
but
it.
not closed.
not closed.
Just open.
Right. Just open. So
Oh,
they're
that's
open, put on
huge.
the contractor puts them on the window out front. So anybody drives by, they know they pulled their permits, and that's it.
And then they don't have to be closed because we
No.
do still have an issue here. They're closing a little bit faster,
Right.
but not
No,
that fast.
right. No, do not have to be closed.
So they'll go ahead and how does this process
So
work? I
we
a
also
buyer.
have at First Second Mortgage a dedicated construction specialist. So all he does is construction. He helps us with our loan officers with construction loans.
Oh, wow.
He is not a loan officer himself. So his job is to help us through the entire process. So a licensed contractor has to be doing the work. So he communicates with the contractor, gets all their licenses, gets their insurance, sets them all up, tells them the process, gets all the information so he can put it into the loan properly. Make sure that we are in with the proper budgets, meaning we're not asking for too much money on a house that's not going to appraise. And then he reviews everything throughout the entire process. So he holds my hand through the process.
Wow. So can you do owner builder permits?
No. So
Okay,
the building
good.
for FHA, the owner cannot be the builder.
Doing the work.
Right.
Okay. So I have a buyer and we find a house that needs some flooring, maybe a new roof, maybe some, new kitchen. What do we do?
You would get an estimate from the contractor for all that work that would separate labor and supplies. And then we would submit that to the construction manager. He'd review it, make sure it all looks good order. Make sure you reach out to the contractor and get final numbers when it gets closer. And then when we go to process it and submit it for an appraisal, we'd submit that work along to the appraiser company. And they'll give us an after repaired value. And the good thing about FHA 203K is you can go up to I think it's 105% of the loan to value, maybe even higher. I have to double check. But so if it comes in for at 100,000 value, but you need to borrow 105,000, you can still do the loan.
Oh, wow. Okay. So if I bring my buyer to you and they get pre-approved for 600, but the house needs 100K,
Right.
do they have to then find a house at 500K? I mean, do you
If they're
understand? I mean,
if
they're
they
just
can't get approved for the 600K, then they're going to have to go down to get approved.
okay. So it's not they can't go over their approval with
Correct.
the
No,
work.
the debt ratios are still
Okay.
in guidelines.
So we got to stay at 600K if that's what you're
And they need
approved
to keep
at.
in mind that they're going to have to put down 3.5% minimum of the total loan amount, not
That's
the purchase
including the
price,
rehab.
including the rehab.
Okay.
So if they're going to 500, I don't know, whatever the number is, you would have to put 3.5% of that. But you want to borrow another 100, so you have to put another 3.5% of the 100.
Okay. Okay. So that's good to remember. So you also have to pay 3.5% of the rehab cost,
Correct.
basically. That's not bad.
It's not bad.
So, and then how are those interest rates about the same as
They're a little higher.
regular?
I would say 3/8 to a half point higher than a regular FHA loan would be.
Oh, but still, that's
It's not bad.
That's not
Not
horrible.
bad. And the goal is that you're getting the house the way you want it at the end, and you're building in equity if you do it correctly.
Yeah.
I wouldn't recommend using the 105% of the value, but ideally, if you put down 3.5%, when you finally finish the product, maybe you have 10% equity in the house because you've built some value into the
Yeah.
home.
So is there a limit, or I guess, is there a minimum? Is there a minimum amount that you can borrow?
Not a minimum amount of work you can do.
So even
I would
if you
say
just need
anything below 5 or 10,000, if you can't come up with that money, it might not be worth borrowing because you are paying a higher interest rate.
Yeah.
So
So
make it worth your while.
yeah. And is there a max amount that you
FHA
can?
limits, whatever it is.
Just the FHA limits.
Right.
So not,
Right.
So, because like, for example, there's a house in Pearl City. It's a total knockdown. It's $315,000, but you probably need $300,000 to make it livable again. Is that something that would work as a 203K?
It could work.
Because it's almost a ground up.
Yeah. For FHA, you can do ground up construction.
Really?
As long as you leave the foundation. You build up from the current foundation, you can do that.
Oh man, we need to go buy that property in Pearl City. Let's just go buy that one.
So,
So
a Fannie Mae loan, you have to keep the shell, but you can add a room. You can do all the renovations inside and you could build an addition to it. You just have to keep the shell.
okay. So you can, so if you're looking at a 2-bedroom, but there is space and not an HOA, that you can go ahead and use the FHA rehab loan to build a 3rd bedroom.
Right. You can do almost anything you want with an FHA loan.
Really?
They will maybe look at certain luxuries that might not conform to the neighborhood that they might say something about, but
Like what? Not like a
like you put in granite kitchens in a neighborhood that the homes don't normally have granite kitchens.
Yeah,
like
you kind of got to stay.
Yeah, gold
Look around at
faucets.
your
and stuff like
neighbors.
that.
Do your neighbors have gutters?
Yes.
If they don't, you don't need them.
Right.
So that's
Exactly. But you can do low landscaping. I believe you can do a pool. So
you can do a pool.
I believe so.
Are you
I have to double check.
Okay, we have to check. We have to double check on a pool. Don't get excited yet. But I'm not sure you really want to. They're a lot of work.
Yeah.
So, yeah, just go to that.
You're doing an FHA 203K to improve the living conditions you're in.
So that's huge because there are a lot of houses in Hawaii that need a little bit of love.
Yes.
And a lot of people don't have that love. So now we talked about the permits. They have to be pulled, but not closed.
Correct.
The loan can close and be funded before the work is done.
You could, to get the final draw for the loan, so the loan then goes and draws.
Yeah.
The contractor will do some work, request a check, we send out a check. More work, more checks, more work, more check. To get the final check, then the permits might either have to be closed or they'll have to get a CO at that point. So that could be.
So they can do a draw even though the permit's not closed. Because what we're seeing with hard money right now is there are certain companies that are requiring the permits to be closed before they will let you do a draw, which is.
I spoke to the construction manager yesterday.
Yeah.
Sure. And he said, no, they just have to be drawn. Is what the way.
Okay. So, I work with investors who fix and flip and we're big in hard money.
Right.
But now it sounds like a 203K loan might be a better, lower interest rate.
Right.
You don't have to have the permits closed to do a draw. But how long till they can resell the property? Is that something an investor would use?
No, FHA 203K is for owner-occupied properties.
Oh, sorry, guys. I
Yeah.
was trying for you.
It's for a home. It's for a homeowner.
So it can't be an
Right.
investment.
And you don't have to be a first-time homeowner to do it either.
Yeah, you don't have, see. I get a lot of people calling the
It has to be your primary residence. Though.
but it has to be primary. How long do you have to live in it? Is it like a VA?
I mean, FHA wants you to live in it for a year, but if for some reason you just can't go get another FHA loan, but let's say you want, there's no prepayment penalty. Let's put that. So you want to sell it after 6 months? Go ahead.
Okay.
You might not be able to get another FHA loan so fast.
So it's usually
right, unless you can explain to the underwriter why you're relocating. If you're doing it in the same neighborhood, the underwriter's going to be like, "Oh, you're flipping homes this way." Yeah, yeah.
So, but if you are willing to be an owner-occupant investor, then that's perfect, right?
Correct.
That
or if you're just saying, "I want to live here for a year," just get it fixed up, get it finished, and then move out and rent
and
it.
that totally works. So, because then you're not paying rent somewhere else, and if you're willing to live in a construction zone,
right? You can even finance the rent that you have to pay while the home is under construction.
You can finance the rent.
So if say we're gonna, if it's totally unlivable, and you're going to need X amount of months to do the construction, you can cover those expenses.
Wow. That is huge. I didn't know any of this, or I would have told you all about it already. That is awesome. So is there anything else people should know about the FHA 203K loan?
No, just make sure that you do the due diligence of making sure you get the right contractor, get a licensed contractor, make them, they need to know to understand that they're going to get minimum draw at the closing, but so they're going to have to do some work and then get the draws. But you can get permit fees, you can get certain soft costs out of the way. You just be smart about it, go for the right neighborhood.
Yeah.
And
use the right agent to help you find it,
of course.
Who can then connect you with the right lender that knows what they're doing, and an on-island lender. And please not, those places we don't like. I won't name them, but there's certain lenders. Please don't.
Right.
Please.
Right.
So, all right. Well, thank you so much.
Pleasure.
This has been great.
Yes.
This has been Kina Knisley with Coffee Talk with Kina. I'll talk to you soon.
The sun is shining. It's a brand new